Hey folks, Simon here with your Tao Daily for Friday, the 4th of October, 2024. The S&P's finished very slightly in the red yesterday. And since breaking out to new all-time highs, we've been in chop for 11 days. That's 2 full weeks and a day in a trading calendar. Now you can see the last two sessions, it used this grey line here that I've drawn in from the previous all-time high as support. It's wicked down to there almost exactly. Also coincident with the 21 EMA. Now we've got non-farm payrolls today, and that will most likely determine whether this box holds or whether it breaks. Now, a weaker than expected non-farm payrolls figure would probably throw the market back into a bit of a growth scare. I know we had a strong ISM services print yesterday, but non-farm payrolls is a much bigger impact piece of economic data. Now, why would it throw the market back into a growth scare? Well, it just raises questions over deterioration in the economy and whether, in fact, we are headed into a recession. Now, the equity market could take that as a short-term positive, all right? Because if we do get a weak NFP, it may increase the chances of a 50 basis point rate cut in November. 25 basis points is currently penned in. That could become 50 if the data continues to deteriorate. Even the equity market is smart enough to realize that a recession is no good for stock prices. So if we do get a weak number, I think any strength will be fairly short-lived. Now, the range of expectations is sort of 70,000 to 180,000. So we're going to get a print sub 100,000. I think we should see the equity market sell off a little bit. If we get a print north of 150,000, I think the equity market would be buoyed by that. The other thing to keep an eye on here is oil. This is the first time in a while that oil has had a decent kind of head of steam. Rose over 5% yesterday. That's a big move even for oil. And look at what we got here. We have got the beginning of an uptrend. All right, we've got a higher high and a higher low. Now, normally spikes in the oil price caused by Mideast tension blow over pretty quickly. This one looks a little bit different, all right, and whether the fact that Israel is putting troops on the ground in Lebanon, and we're seeing some more escalation directly between Israel and Iran, may put a slightly different complexion on this conflict. Plus, I know China's been on holiday all week, so everyone's forgotten about China temporarily. But if the China stimulus really does start to take effect, that's generally going to provide an upward drift for commodity prices in general. Payrolls and oil are the two things that I'm watching today. That's what I got for you. I hope it helps, and I will catch you next week. Thank you.